So, Richard Harris, welcome to the World Wealth Creation Conference 2017 in Singapore.
Thank you.
How did it go?
Well, I hope it went okay. You'll have to ask the crowd, but I think we started with about 5 and ended up with a full room, so that can't be too bad.
Yeah, absolutely, and there's still people arriving now, and as I look around us, there's definitely an audience watching this this very interview that we're doing right now. So I wanted to cover off maybe some areas that may or may not have been touched on during your speech at the conference. And one of the most fascinating things I find about yourself, as well as being a renowned expert in investing, is that you are an aerobatic pilot.
Yes, that's right. Well, when I was much younger, I wanted to be a spaceman or jet fighter pilot, and never quite made it, as you normally do. So at a relatively late age, I went back to flying and just got addicted again.
Fantastic. And I understand you have a very experienced instructor as well.
Yeah, my instructor's 80. He joined the Royal Air Force before I was born, and I'm not a spring chicken either. But it's quite strange. I sort of bobble about the sky doing loops and barrel rolls, and he takes it over, and it's like being on a velvet slide. It's amazing, even at that age, what experience can do.
Well, all I can say is you guys are extremely brave, because I'm not so sure I'd do the same thing. I like my feet on the ground.
Well, the ground's a long way away. That's the only thing that hurts.
Absolutely. Okay, so I really wanted to touch on some of the areas you were covering in your conference and speech around the ideas of the emotional aspects of investing and controlling your emotions. So tell us more about that.
Well, I think when you start in the investment business, you learn a lot about price-earnings ratios, valuations, fundamentals like where the economies are going, things like liquidity, things like risk management, portfolio building, and you still get it wrong. And behavioral finance isn't necessarily about getting it right, but I think what it does is enable you to try and focus on your emotions when investing, on the kind of things that you as an individual may be particularly susceptible to, and hopefully if you can figure out what that is, then every now and then you might be able to do something about it.
Yeah, absolutely. Well, how do you start with that? Because when I think about emotions, I think, well, I feel quite anxious about spending money, or even worse, losing money.
Well, that's the prospect theory, of course, is that most people find the prospect of losing more painful than the joy of winning. And it's just something that many of us do. Some people are the opposite way around, but many of us have a prospect. We sit somewhere and we focused on that position. But I think the main thing in terms of looking at where behavioral finance can help is in the aspect of biases, because we all have particular biases, and sometimes it may be we get anchored to a particular price and can't get ourselves away from it, or we think in a particular way that draws a series of patterns that may or may not be right, that they need to be tested against something else. Or the best one, of course, is very often we end up in herds because we're afraid of failure, so we end up doing what everybody else does. And, mediocrity isn't where it's at. So you have to try and understand yourself better in terms of the emotions and how you apply your emotions to your investing.
So would following the herd emotion, for example, would this be a case whereby the reason why so many people say, why didn't I invest in that fantastic opportunity with Amazon or whatever it was, which was so unknown 20 years ago, yes, is worth so much today?
Yes, that's hindsight bias, of course, which is where you say, oh, I wish I did that. And of course, sometimes it is quite difficult to see these things, and sometimes you may actually end up with particular elements. For instance, we've got Bitcoin at the moment, which is very much a herd mentality. I mean, I always think of Bitcoin as the Kardashians of the financial world. Bitcoin is famous for being famous. It's actually going up because it's going up, not necessarily because there's any real fundamentals behind it. So you have to be careful very often in the herd mentality, what you're looking at, what you're following, and does it actually fit with some of the fundamental techniques that you've learned elsewhere?
Absolutely, and interesting you bring up Bitcoin as well. I've been watching Bitcoin a lot over the last few years really, but the last few months. It has broken barriers where it's gone up to $2,000 US, 3,000, 4,000, 7,000, 8,000, 9,000, looking like it's knocking on the door of $10,000 right now. So it's like it seems to be going crazy as a potential investment for a product which appears to be unregulated.
Well, of course, eerily, if you look at the chart of what Bitcoin has done in the last couple of years, it quite closely parallels what the price of tulips did in Holland back during the tulip bubble, which of course collapsed in a huge way. I think the thing about Bitcoin is it's relatively small at the moment. It's not likely to cause any significant damage to the markets, even if everything goes bust at the moment. It's not really systemic. But you could be looking further out into the future to where people are starting to borrow off Bitcoin, where there's leverage, where they're using leverage products, and then they use leverage products on synthetic products, which are based on Bitcoin, which itself is an underlying synthetic product. Then you start getting very serious. So whereas the Dutch were able to create a tulip crisis pretty well all by themselves based on tulips, we have the marvelous way of leverage and structured products and debt that can really leverage it in a big way up and afraid down.
Absolutely. Well, certainly in terms of lending with the cryptocurrency technology, there is one, I don't know if you've heard of it, there's big connector that's out there, which actually does that, which actually ties itself to the Bitcoin valuation and allows people to put their money into the scheme so other people can borrow from it, which sounds a little bit like a scheme that somebody called Madoff was running once upon a time.
You may say that. I could not possibly comment.
Neither would I.
However, I think that this is one of the things in modern finance. It's very easy to leverage. It's very easy to structure some of these products, and Bitcoin is just another product. But the problem is, if you're looking at a share, for instance, and a derivative based on a share, a share actually provides you some income. So if a company makes a dividend, they pay a dividend through the share. So there is something there. There is an income. There's nothing with Bitcoin. There's no control. There's no regulation. In some of these initial coin offerings, these ICOs, there's no prospectus. There's nothing that we would expect in a traditional marketplace for somebody asking for money from somebody else. And that is extremely dangerous.
Absolutely. So in terms of somebody has 10,000 US dollars today, and is they're spending money, they're happy to say, right, this is what I want to safely put somewhere, I want to invest it, and if I make a loss, then it's not going to be painful to me. What would you suggest they do? No,
well, of course, it's quite difficult at the moment because all assets have gone up. Now, I think there's still some legs in the market. Okay, we're end of 2017. I always thought 2018 may see a crash. I'm not sure we're there yet because even though asset prices are high, I don't think we're in a bubble. Bubbles happen when you see completely irrational things happen, like AOL buying Time Warner, in 2000. We might see Tesla buying Toyota or something like that. Crazy things happen at the top of a bubble. I don't think we're there yet, but we are in quite dangerous territory in the equity markets, but I think there's still a few legs in them yet. But I wouldn't put aside cash. I'd be raising cash at the moment. Yes, you're earning nothing on it, but in 3 years' time, it might be better to have cash at nothing than equities that have lost 30-40% or Bitcoin that's lost 99.9%.
Sure. So maybe for the future, cash will be king again.
Cash generally is king. You come from cash, you stick it in investments, and it comes out hopefully an awful lot higher. But cash is not to be sneered. Actually, there's one final investment strategy that I always think is quite useful that everybody forgets about, and that's spend some of it. That's why it's there. Spend some of it and enjoy it.
There we have it, guys. Spend your money, enjoy it. Thank you very much, Richard.
My pleasure. Okay.